All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. It is the 21st of November. We are just past the earnings report of NVIDIA, the big tech event of the quarter. And market was not sure how to process NVIDIA's record earnings, record sales. And when you break down the earnings per share in the various divisions that they manage, everything was great. Everything was very good. It just that the only hitch was that Nvidia made some forward projections for the next quarter, and they were really good, very good projections above expectations, but the range was quite wide, and the lower end of the range, I think, made the market a little bit scared. So it was an initial sell-off. We had a little bit of early weakness this morning, and we are back up. Let me just check to see where Nvidia is trading. Right now, NVIDIA is up about 0.6%. That's better than being down 4 or 5%, which is what it was overnight. All right, so I am Dr. Tom Carr, aka Dr. Stoxx, and I manage a site called drstoxx.com, drstoxx.com, and it's your one-stop shop for trading advisories, trading systems, how to trade webinars, and so on. And I'm coming you today from the live trading room over in Discord. And if you want to join us with a big group of amazing people, we trade together all throughout the day. I tell you what I'm buying, selling, price I get in, my stop loss, my target price, and all of that, the reasons for the trade. If you want to get in on that, click on this live trading room button, and you're good to go. So what we're going to do today, we're going to look first at some index charts. Let's start with the MES, the S&P 500 futures. And you can see that, get rid of some of these drawings here. You can see that we're in a nice uptrend, right? The 21 period moving average, that's the blue line, is above the 50. The 50 is above the 200, the dark green line down below. You can see increasing volume on the way up as we are moving slightly higher each day. Nothing too exciting here, but given that we are just about 1% under all-time highs and a nice round number of 6,000, and we're moving higher, and the volume is picking up, and the market is mostly happy, this is all good. It's all good. It's all bullish. There's no signal anywhere in this mix that you're looking at right here that indicates any kind of a bearish concern. Yes, we have had some days of distribution. Some of that was the Japanese yen trade. Some of that was worry about World War III. Some of that was worry heading into the election, and then post-election euphoria wearing off. All right, that happens, right? The market is always 3 steps up and 2 steps back. But this is a very nice looking bullish pattern that we've got going on here, and no need to be real concerned at all. No need to put on any hedges unless something comes out that the market is not pricing in or hasn't anticipated. We should be very good holding our swing longs, and we've got a whole bunch of swing longs on at the moment. So here's the pattern. My favorite pattern in the market is this one that you see right here. A sequence of higher lows, a very clear ceiling at the top. As price gets closer and closer to that ceiling and keeps testing that ceiling, keeps knocking on that door, it is more likely to open, break out to the upside, new set of all-time highs, and then we're off to the races, right? That's kind of where we're going. What price is this here? 6,045. This is the December contract, so if you're looking at the November contract or the January contract, the number would be a little bit different. But something over 6,050, and we should be off into the blue zone up here for a nice test of the 2.0 standard deviation of the linear regression channel. All is good. We're not overbought. Down into the stochastics, we're down below 50 even. And S&P 500 is fine. Now, the NASDAQ is the one that's been a little bit... I wouldn't say problematic, but it's been a little bit less robust, more consolidative. And a big part of that is the semiconductor space, which has been weak, with one exception, NVIDIA. You guessed it. So if you look at Qualcomm, if you look at AMD, if you look at ARM, if you look at SMCI, if you look at, what was the other one I was thinking? Avgo, Broadcom, you're going to see some downtrends even in that group. ASML, another good example. Downtrending stocks because these companies are pricing in a whole variety of things, but a lot of it is China related, and they're just not yet getting back on track. Now, NVIDIA, with its earnings out already, those earnings being extremely good, best we've ever seen, best the company's ever posted, that should help the rest of the sector. And let me show you, we'll take a quick look at SOXL, which we added this morning. And you can see the downtrend right here. SOXL is the 3X bullish version of the semiconductor space. It's an ETF. And it's been downtrending. The 21 is below the 50. The 50 is below the 200. Everything is in a slide mode. But if we just look at the last 6 weeks to 2 months, we see a falling wedge, which is a potentially bullish pattern. It's only bullish when it breaks out. And once it does break out, it's not like you're off to the races. It usually takes another couple of months to kind of get back on track. But we're at that breakout point right now. And what that usually means is that the lower edge of that wedge will not be violated to the downside. So we can put, at least for, per technical analysis, we have a line in the sand right there around 26. That should be, shouldn't go below that. If it does, then something else is going on in the market besides mere price momentum. But we are on the verge of breaking out today. Our target is up here around the 50-period moving average, and not a high-quality setup. But given the value here, given the growth, given NVIDIA, given the fact that this whole sector has been beaten down for quite some time, you can see it's really fallen hard off the highs. It's due for some reversion back to the mean. All right, let's take a look at, the NASDAQ was talking about NASDAQ, how it's been really consolidating, had the breakout on the election, pulled back below the neckline, not so good, right? But the stacked MAs were still in an uptrend, and now, as of today, we have regained the neckline and the 21-period moving average after early flush out. All that's very good, and very good volume as well today. Very good volume today, very good volume late last week. So the next target is up here to test the all-time highs. That is all-time highs. So we will test that and likely break out for a good, healthy rally into the end of the year. Small caps. We are long small caps, and this is when I was talking about pullback setups earlier, this is it. This is a high-quality, very bullish pullback setup. What is a pullback setup? Well, first of all, you have to have an uptrend. You can see that in the LRC. It's sloping from lower left to upper right. That's an uptrend. You take a look at the MAs. The 21 is above the 50. That's an intermediate term uptrend. The 50 is above the 200. That's a long-term uptrend. Everything is in an uptrend. Even the MAs themselves are rising. So everything's in an uptrend, and then you get this pullback. You get this sell-off. It looks a little scary, right? 4 big red sticks in a row, increasing volume. Oh boy, everybody's getting out of small caps. Oh no, the market's going to crash. Oh no, World War III is on our doorstep. And then you get a little doji, just a little tiny inside day bar right at the 21-period moving average. I don't know if you can see it, but it's that bar right there. That was the 18th of November Monday of this week. Little tiny doji, little tiny inside bar. That is the signal, not necessarily to buy it on that day, but the signal that this pullback is likely to come to an end. The buy signal was given the next day. Bigger volume than the previous day. Big flush out, heading south, taking out all the weak hands, sucking in a whole bunch of new shorts, and then it ramped right back up to close near the highs of the day to give us a green bar. That's your buy signal, and it's been off ever since. Really nice looking day today. So we're seeing rotation. We're seeing rotation out of some of the big blue chip techs. Let me show you what that looks like. I don't know if this still is red. Yeah. So here's your heat map for the S&P 500. Mostly green. Most stocks are up today. 65, 70% of stocks are up today. But what are the red ones? What are the ones that are really selling off? Google down on some political headwinds. Amazon down, and I'm not exactly sure why Amazon is down, but it is. Microsoft is down. So you're seeing rotation out of some of these big blue chip, what we call the MAG stocks, the MAG 7 stocks, and it's flowing into, and I'm not really seeing any sector here that's looking greener than the others. Maybe the software sector. Software sector is doing pretty well, in fact. Flowing into small caps, flowing into some growth names, flowing into, I don't know if it's flowing into biotech. Last time I checked, not so good. But there are names that they're picking up some of that inflow as traders take money out of, Microsoft hasn't been doing well. It's not in a good place. And so people are abandoning ship. And also we had a big crash today in MicroStrategy. I don't know if it's bounced back yet. Yeah, not really. Not really. So this is a play on Bitcoin, right? Bitcoin's just been going up and up and up. It's almost at 100K right now. And MicroStrategy is a company that it was selling software, and then for whatever reason they decided that the owner loves Bitcoin. He decided to start collecting Bitcoin. He started selling shares back to the market and using the proceeds to buy Bitcoin. He did that over and over again in the millions and then the hundreds of millions, and now he's doing it in the billions, amassing this huge hoard of Bitcoin. MicroStrategy, on that basis alone, rallied 250% over the last year. Bitcoin itself, however, only rallied 50%. So MicroStrategy clearly was way ahead of the underlying asset that gives it its value. It was due for some pullback. And there was a group that came out this morning that normally targets companies to short sell called Citron. And they came out with a negative article about MicroStrategy, and it's been all downhill from there. All right. So that's also a reason why money's coming out of MicroStrategy. It was the gorilla in the room. It was sucking up all the oxygen. It's coming out of MicroStrategy and going into some of these other beaten down names. Yeah, some of the miners like Riot and Mara. We're actually in Mara because they had some good news out today. Coin is a exchange. Hut is an exchange or a miner, I guess. I'm not sure which. And those also have been pulling back today. So gold, I wouldn't be buying gold right here, but it is at a place where, we actually were long gold futures. We got out yesterday near the highs. It was very close to our target, and then it went all the way, kept going up. But it is tagging the 50-period moving average today. It's usually a place where things kind of cool off a little bit, but gold got, we've been going over this every day. Gold came way down below the 50-period moving average. Typically, the dip below the 50 is only a 2% dip, and then it rallies back up. It got all the way down to 4%, right? Twice the average dip below the 50, and is now rallying back as a mean reversion. Now that it hit the mean, the 50, all bets are off. This would be a good place to start to take some profits. It should, however, continue on higher because all the trend is up and the volume has been good. Okay, that's all I want to say about that. Let's look at one thing I wanted to look at was drill down into an hourly chart of there's that pattern. This is what I wanted to show you. So just a little tip on this pullback setup, right? It comes back down. It goes up and up and up and up. Maybe all-time highs, maybe new 52-week highs, and then it pulls back down 4, 5, 6 days. And then, bam, it hits support of some kind. The LRC midline, the 50-period moving average, the 21-period moving average, a former price support. Support can come in all kinds of forms. Then you get a little reversal bar, something like a doji, something like the hammer. We saw a doji, an inside day bar, and a hammer back to back. That's your buy signal. But you can even be a little more precise in figuring out when a pullback ends and when it's okay to buy that pullback for the next leg higher by drilling down to the hourly chart or even lower. You can go down to the 15-minute chart if you want. And what we saw, here's the pullback, right? Here's your pullback right there. And then we had this flush out low that flush out low, right? Getting rid of all the weak hands, the last gasp of the shorts, selling like crazy. Everybody's panicking, getting out of the instrument, whatever it is. And that's when, of course, the professional money traders, the big money traders, the guys that know what they're doing, jump on it, get right back on, and it's off to the races. How can you pinpoint that sort of reversal, right? Well, there are several ways you can do it. One of the things you can do, drill down to the hourly chart and look for a pattern, a bullish reversal pattern. Here you've got one very clearly marked out. Here's your left shoulder. Here's your head. Here's your right shoulder. Once you start getting into the right shoulder, and it looks pretty clearly like it is forming an inverted head and shoulders, you don't need to wait for a break of the neckline. Start building a little position right in that circle, somewhere in that circle. There's a big green stick, big green stick, big green stick, boom, boom, boom. But you could have gotten in down here around 23.30. So that's one way to get into a pullback. You look on the daily chart for that reversal signal of some kind, right? You're going to need a doji, you're going to need a hammer, you're going to need a hold of support. You don't want to buy on a red stick. You want to buy on something that's green. But you can even make that a little more precise, do it intraday by going down to the hourly chart. All right. Before we look at some more charts, I just want to give a little plug to a friend of mine who put together this site, bullflow.io. And one of the ways that you can keep track of where smart money is going, big money, big professional money, fund managers, where are they going, is to follow the flow of option contracts, both calls and puts. This is a site, and there are several of them like this. This is a site that monitors unusual volume flow in the options market, not only on the indexes, but also on major stocks and minor stocks as well. So if you have a guy that comes in and just sweeps all the open interest out and just goes boom, 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 boom on a single strike, on a single expiration, building a big position, one trade after the other, boom, 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 hitting the same thing. Sometimes they're even buying above the ask. They're so desperate to get in. This site will tell you exactly when that happens, and they'll give you the stock, they'll give you the strike price, they'll give you the expiration, they'll tell you how much is being bought. Sometimes it's in the millions. And then you can say, oh, all right, there's a lot of professional interest in Microsoft. There's a lot of professional interest in Carvana, which we just got into because of this. Not this site, but I use another site. Now, here's the thing that I wanted to show you. This has all kinds of bells and whistles, right? You can optimize it to only show the kinds of option trades that you're interested in. You might only be interested in, near-term expiration. You might be only interested in way out of the money long-term options and everything in between. You can optimize it for that, right? And so there you go. There's a good example of optimizing it. And then it would give you all the trades that match that optimization. So let me show you the pricing here, because the one I am in, the one I use, which is very good, there's nothing wrong with it. And it's got all kinds of extra bells and whistles, and it's got a Discord room, and there's a good community using it. But I'm paying about $100 a month for it. This one is you can get it as cheap as $25 a month, and and I think you can even get if you go to their Twitter feed, you can get a coupon for half off, something like that. I think it's half off your first month or $50 off the annual fee. So it's pretty cheap, right? It's 1/4 the price of what I'm paying. So I just wanted to let you know. Always trying to help out, especially folks in the room that I know are often trading on a tight budget. I certainly was. My first few years, I started trading with $2,000. And I won't tell you what I'm managing now, but it's a lot more than that. All right, let's go to my power gap setups. So I just been running the screen every 3 or 4 days. Anything new that shows up, I'll add it to the list. If it is not working out, I'll take it off the list. If it's gone up too far, I'll take it off the list. But let me just show you what I mean by power gap. So let's go to the daily. This is a screen that will find stocks that sometime within the last 10 days, 10 trading days, 2 weeks, there is a gap up. That gap up is to a new 52-week high. So it's a very significant gap. It's not a trading higher, it's a gap overnight to the 52-week high. Often this comes on earnings. Sometimes it's an upgrade. Sometimes it's a pre-announcement. Sometimes it's if it's a biotech stock, it might be a phase 2 trial, phase 3 trial. There are all kinds of reasons why a stock might gap up to a new 52-week high overnight. That usually is a very good place to consider a long. And it's not that you can buy every single gap, but that gap usually puts a line in the sand. It's not going to go down below that. Now, sometimes they do. Okay, sometimes they do. And there's a way of playing it when they do. But if you can see this one traveled higher, you could have bought it on the day of the gap. You would have made a $10, $12 handle trade. It comes back down, retests the same level, 21 period moving average, another good place to get in. You back up for another 10, 12 handles, and you can play this up and down, up and down. That line in the sand should be very, very firm, not likely to get violated. However, if it does, now here's another one, flute, right? Sometimes they do this. They coil up really tightly. You can start to nibble inside of this coil, waiting for the big burst move, which looks like it's happening today. You'll see several of these. Now, here's another good example. Gapped up 52-week highs, and then it started to trail lower. All right. Nothing wrong with that. We just don't want to see the gap close. We don't want to see that gap close. And this can form a nice pullback setup. So the gap up, slow trail lower over a week or two, stochastics way down, well below the 20 line, and then the breakout move. You would buy the breakout move, right? You're going to see a number of these setups. Here's one, right? Here's your line in the sand, rallied up, came back down to retest, back up to new 52-week highs. Here's another bank stock or finance stock doing that same little gap up, pullback, oversold stochastics, breakout today. That's the day you buy on that breakout day. Here's another, this is one I like for a diagonal debit spread. We might get into this one on Friday, tomorrow. But this is flagging, right? We're seeing a little flag form. Buy inside the flag. Don't wait till it breaks out. Buy inside the flag in anticipation of the next move higher. We're long KKR, and it was one of these little up. It broke out 52-week highs, rallied higher initially, came back down to retest. We got in on that day right there, and today we've got the thumbs up. Big up day for us. Here's one that just gapped up and just kept on going. Never did come back, never did pull back. Disney, I think, same story. We are long CRH, and we were long GMED. I got out a little too early on that one, as I often do. But here's another one that is doing a flag, right? We are long Upstart. This was a big up pullback. We got in on the pullback. Now we're starting to see it move higher. Actually, I think I sold too early, didn't I? Anyway. So I just wanted to show you that this scanner is pulling up some really, really nice setups for us. I'm just trying to figure out the best way to play these because this is kind of new, right? I've been training for 23 years. Hey, I'm an old dog, but I can still learn some new tricks. And it's always helpful to have a variety of approaches to the market. This is one of them, just trying to figure out the best way to optimize these signals. All right, let me show you a few greens, and then I will go over to the Discord and see what stocks you're interested in. Let's see. Let's sort these best worst to best. All right, so this one hasn't set up yet, but this is a pullback setup, right? Uptrend, stacked MAs, pull back to the LRC midline. We're just waiting for a consistent green candle on good volume. Don't have that yet. Here's a biotech stock. This is actually a little bit already in motion, right? Pull back to the 21. Oversold stochastics. Nice little green bar right down, inside day bar. That's your buy signal, and boom. We're long this one already. We're long this one already. Kind of waiting for this one to break that resistance line right there. It's been a slow mover for us, but I'm patient with it. We're going to hang on to it as long as we can. TSM, the big Chinese, sort of Chinese, not really Chinese, Taiwanese semiconductor play, is doing really well compared to the rest of the sector, right? A lot of semiconductors are in downtrends. Here's one in an uptrend. Nice pullback to the 50-period moving average. Bounce today, falling wedge. Big volume today as well, just not quite giving us the price momentum we want to see, but I do think it's going to be outside of that wedge probably tomorrow. MAGA is a interesting new exchange-traded fund, and it has, I don't know, something like 90 to 100 stocks in its holdings that have something to do with the new administration coming in, President Trump. And it's off to the races today. I have my ETF trend letter members in this one. And I think I like this one. Yeah, this is one I like. ACIW, not sure what it is, but it is a big, strong up, right? Here's your power gap, 52-week highs, continued on higher the next day, pulled back in without violating the gap to the rising 21-period moving average, stacked MAs, good volume, and is starting to pull, starting to move higher. This one is ready to go. ACIW, you could buy it right here. You'd put a stop under yesterday's pivot low, and your target would probably be up here around 62. We just went long Carvana, right? Here's your power gap, sideways, 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 banging up on the resistance line up there at 250, and oversold stochastics. This is just a nice bullish flag setup, bull flag setup. Doesn't get much better than that. Now, it could still sort of linger under 250 for a few more days. We'll have to be patient with it, perhaps, but this is ready to spring higher any day now. We're also long GNRC, perfect pullback setup. Big spring higher up beyond the LRC, pullback to the rising 21-period moving average. Reversal bar yesterday, that's when we bought it. We bought it on that reversal bar, and we're seeing the fruits of that by today. Big upside. We just bought Fiverr. This is actually more of a breakout play, multi-month breakout a few days ago, bull flag, and big run higher today. So we got in a little bit late. Normally, I'd like to buy inside the flag. We bought up here, but the momentum is so good, we went with it. We just went with it. TTD, did we sell this one already? Or are we still in? No, we got out of this one. I'm always a little bit quick on the trigger when the market starts to pull back. We have some profits on the table. I usually like to lighten the load just in case things get really messy. And this was one that flushed me out on an early, when it went red early, and then of course right back up with a lot of other stocks too. Marvel is one I liked yesterday. Yeah, it's big up today. So here's your pullback, right? Up, 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 52-week highs, soft pullback to the rising 21-period moving average, oversold stochastics, green candle reversal, boom, you're off to the races. All right, guys, let me see what you're interested in. And you know what? I'm going to stop recording now, and I'll take these chart requests off the air, and then we'll go from there. Just give me one moment, please. And bye, everybody. See you tomorrow.